Welcome back to the Daily Crypto Roundup. Today, we need to slow this down and make sense of what is actually happening, because on the surface, the market looks like it is trying to recover. Bitcoin has pushed back toward the $65,000 area. Ethereum is holding around $1,700. XRP is still fighting around $1.14. Solana is under pressure around the low 70s. So the question today is simple. Is this the start of a proper recovery, or is this just another bounce inside a weak market? That is where we are going in this episode. First, we are going to look at why Bitcoin bounced. Then we are going to look at why traders are still not fully convinced. After that, we will move into XRP because there is a very important setup forming there around the $1.12 to $1.15 area. Then we will look at the Bank of England's stablecoin rule change, because that is a massive UK crypto story. Then we will move into Solana, MoneyGram, strategy, Ethereum, and finally the risk stories in DeFi that remind us why this market still needs proper security and regulation. Before we get into it, quick mention for our sponsor Kraken. If you are looking to buy Bitcoin, Ethereum, XRP, Solana, or you are just building your crypto position over time, check out Kraken through the link in the description. It is one of the most established crypto platforms out there, and if you use our link, it helps support the show, helps keep the podcast going, and helps us keep doing the XRP giveaways for the community. As always, this is not financial advice. We are still continuing to give 20 XRP to users who sign up with our link in the description. And remember, always do your own research. Never invest money you cannot afford to lose. But if you are going to use Kraken anyway, use the link in the description and support crypto news today. Right, let's get into the market. Bitcoin is sitting around the mid-$64,000 to $65,000 area, and today's bounce is not just random crypto noise. This is being driven by the bigger macro picture. We have had movement around Iran, oil, inflation expectations, and risk sentiment. And that is why Bitcoin has managed to catch a bid. The important point here is that markets are not only looking at crypto, they are looking at oil prices, the dollar, the Federal Reserve, global tensions, and whether investors feel confident enough to move back into risk assets. When oil prices cool down, inflation fears can ease. When inflation fears ease, traders start to think maybe the pressure on the Federal Reserve softens. And when that happens, Bitcoin usually gets some breathing room. That is why Bitcoin pushing back towards $65,000 matters. But we need to be careful here, because this is not yet a confirmed breakout. This is where a lot of people online get it wrong. They see one green move and immediately start shouting that the bull market is back. But the honest read is more balanced than that. Bitcoin has improved, yes. The panic has cooled, yes. But the market still has not proved that fresh demand has properly returned. That is the key message today. The market is bouncing, but it has not fully confirmed the recovery yet. Bitcoin needs to turn this $65,000 area into real support. If it can hold above that zone, then the next big area traders will be watching is around $68,000 to $69,000. That is where a lot of liquidity is sitting. And that is where Bitcoin would need to push through to convince the market that this is more than just another relief bounce. But if Bitcoin fails here, then the downside levels come back into focus quickly. First, you are watching $63,000, then $62,000. And if the market loses confidence again, the psychological $60,000 level becomes the big line everyone starts talking about. So for Bitcoin today, the message is simple. Better than yesterday, but not safe yet. Now, the reason this market still feels fragile is because ETF flows are still not where they need to be. When spot Bitcoin ETFs were pulling in serious money, they acted like a constant source of demand. That was one of the biggest drivers behind the stronger Bitcoin moves earlier in the cycle. But when those ETF flows start turning negative, the mood changes. It does not mean Bitcoin collapses instantly, but it does mean one of the strongest buyers in the market has stepped back. And that is what we are seeing now. The outflows have eased, which is good. The selling pressure is not as aggressive as it was. But easing outflows are not the same as strong inflows. That is a very important difference. Less bad is not the same as bullish. That is why this market feels cautious. Investors are not panicking in the same way, but they are not rushing back in either. The market is waiting for proof. It wants to see Bitcoin hold key levels. It wants to see ETF demand return. It wants to see macro pressure calm down. And it wants to know whether this bounce has real strength behind it or whether it is just a short-term reaction to softer oil and better geopolitical headlines. We can also see that caution in the derivatives market. Even though Bitcoin and some major altcoins are trying to recover, traders are still hedging. They are still paying attention to downside risk. That tells us the market has not fully flipped bullish. When traders are completely confident, you normally see more aggressive upside positioning. Right now, the tone is more defensive. So again, Bitcoin has improved, but it still has work to do. Now let's move to XRP, because this is one of the most important stories for our audience today. XRP is trading around $1.14, and the key level right now is the $1.12 area. That level has been defended, and that matters because XRP had started to look weak after slipping away from the $1.15 zone. But buyers have stepped in around $1.12, and that has kept the chart alive. This is the battle zone. If XRP loses $1.12 cleanly, the chart starts to look much weaker. That would suggest the buyers are not strong enough and that the market may need to search for lower support. But if XRP can reclaim $1.15 and actually hold above it, then sentiment starts to improve again. That is why the next move is so important. XRP does still have strong narratives around it. There is still attention around institutional products, ETF speculation, Ripple's wider ecosystem, and the possibility that XRP could benefit if more money starts rotating into altcoins. But price is still the final judge. And right now, the price is telling us that XRP is not dead, but it has not broken out either. It is building. It is fighting. It is trying to hold its base. For XRP holders, the simple version is this. $1.12 needs to hold. $1.15 needs to be reclaimed, and then we can start talking about stronger upside again. Until then, XRP is in the middle of the fight, not at the end of it. Now let's move to one of the biggest regulatory stories of the day, and this one is especially important for UK listeners. The Bank of England has backed away from strict individual stablecoin holding caps. That is a big deal. The original idea was that individuals and businesses could face limits on how much sterling-backed stablecoin they were allowed to hold. But now, the Bank of England has moved away from that approach and is instead focusing more on wider issuance limits and reserve rules. This is much bigger than it sounds. Stablecoins are becoming one of the most important parts of crypto because they connect traditional finance with digital assets. They are used for trading, payments, settlement, remittances, and moving money across platforms. If the UK had made stablecoins too restrictive, it could have pushed innovation away from the country. So this change suggests that regulators are starting to understand something important. Crypto cannot grow properly if the rules are so tight that nobody can actually use it. Now, that does not mean the UK has suddenly become the most crypto-friendly country in the world. It does not mean everything is solved. But it does show that regulation is moving from fear into structure. And that is what the market needs long-term. Crypto does not just need hype. It needs rails. It needs rules. It needs banks, fintechs, exchanges, payment companies, and regulators all operating inside a framework that people can actually use. And that brings us perfectly to Solana. MoneyGram has joined the Solana ecosystem as a validator. This is a proper adoption story. Not hype, not meme coins, not a random price prediction. Actual payments infrastructure. MoneyGram is a global money movement company. So when a company like that is not just watching blockchain from the sidelines, but actually helping run the network, that tells you where the industry is heading. Solana's long-term argument has always been speed, cost, and payments. If global payment companies start building around those rails, that strengthens the case for Solana as real infrastructure. And this fits perfectly with the broader stablecoin trend. Stablecoins are becoming payment tools. Solana wants to be one of the chains where those payments move quickly and cheaply. MoneyGram being involved adds credibility to that story. Now, does that mean Solana's price pumps immediately? No. Solana is still under pressure around the low $70. The chart is not perfect, but adoption stories like this matter over years, not hours. That is the difference between trading and investing. A trader looks at whether Solana breaks resistance today. A long-term believer looks at whether serious companies are still building on the network. And today, the answer is yes. Next, let's talk about Strategy and Michael Saylor. Strategy has bought more Bitcoin again. It added another 520 Bitcoin for around $35 million, taking its total holdings to more than 847,000 Bitcoin. On the surface, that sounds like the usual Saylor story. More Bitcoin, more conviction, more long-term accumulation. But the more interesting part is the cash reserve. Strategy has also added around $300 million to its cash reserves, taking the total to about $1.4 billion. That matters because Strategy is not just a simple Bitcoin buyer anymore. It has become a complex financial structure built around Bitcoin, equity, preferred shares, debt, cash management, investor confidence, and dividend obligations. So yes, the Bitcoin purchase grabs the headline. But the cash reserve tells us something deeper. Strategy is trying to reassure investors that it can keep supporting its financial structure even during weaker Bitcoin conditions. That is important because when Bitcoin is flying, everyone loves the strategy. But when Bitcoin is under pressure, investors start asking harder questions. Can the company keep managing its obligations? Can it keep investor confidence? Can it keep buying Bitcoin without overextending itself? The extra cash reserve is Strategy trying to answer those questions before they become a bigger problem. Now let's touch on Ethereum. Ethereum is holding around the $1,700 area. But today's Ethereum story is not really about price. It is about funding and governance. There is a proposal for validators to redirect up to 10% of staking rewards toward ecosystem funding. Supporters will argue that Ethereum needs a better way to fund development, research, infrastructure, and public goods. They will say the network benefits if the ecosystem has a more reliable funding source. But critics will look at it differently. They will say this could put too much influence in the hands of large staking operators. They will ask who decides where the money goes. They will ask whether validators should be expected to fund the ecosystem at all. And they will worry about Ethereum becoming more political over time. This is why Ethereum is so interesting. It is not just a technology story, it is a governance story. It is about how a decentralized ecosystem actually funds itself without becoming too centralized, too political, or too dependent on a small number of powerful players. So for Ethereum holders, this is not a short-term price catalyst. It is bigger than that. It is about the long-term structure of the network. And finally, we need to talk about risk. Taiko, an Ethereum Layer 2 network, halted after a bridge exploit. Loss estimates were around the $1 million to $1.7 million area, and users were warned to withdraw from bridges. This is another reminder that bridges remain one of the weakest points in crypto infrastructure. Every bull cycle brings new users, new capital, new protocols, and new excitement. But it also brings risk. And in crypto, the risk often appears around bridges, smart contracts, custody, and anything that connects one system to another. That does not mean the whole market is broken. It means the industry still has work to do. If crypto is going to become real financial infrastructure, security has to improve. Users cannot be expected to understand every technical risk behind every bridge or every protocol. The systems themselves need to become stronger, safer, and easier to trust. So where does that leave us today? The market is better than it was, but it is not fully safe yet. Bitcoin has bounced because oil cooled, Iran fears eased, and risk sentiment improved. But ETF flows are still not strong enough. Derivatives traders are still cautious, and Bitcoin still needs to prove it can hold above $65,000. XRP is alive, but it needs to reclaim $1.15. Solana has real adoption news with MoneyGram, but the price is still under pressure. The UK stablecoin story is genuinely important because regulation is moving towards something more practical. Strategy is still buying Bitcoin, but it is also building cash reserves to protect confidence. Ethereum is dealing with serious questions around funding and governance. And Taiko reminds us that crypto security still has to keep improving. So today's message is simple. The bounce is real. The recovery is not confirmed. Watch $65,000 on Bitcoin. Watch $1.12 and $1.15 on XRP. Watch whether ETF outflows continue to slow. And watch whether this market can turn good headlines into actual demand. That is the real story today. As always, stay sharp, do your own research, use the Kraken link in the description if you want to support the show, and we will see you at the top.